let's dive into the mid-year crypto outlook. We're going to start with what's been happening in 2026 so far. We'll move into where we are now from both a market and a macro perspective. And then we're going to spend some time looking at what's ahead, grounded in data, like Denise said, not in predictions. And we'll talk about what investors might want to keep in mind. Let's start with a trio of viewer questions that came in recently. Let's see if you can spot the theme in these questions. Howard, just a three-worder, crypto winter forever? Gregory asks, is crypto dead? And Louise wants to know if crypto has reached its limit for the foreseeable future.
Yeah, I mean, let's look at the price action. You have a lot of uncertainty happening in the Bitcoin market right now. The three that come to mind, number one would be MicroStrategy and what's going on with that company. They have $50 billion worth of Bitcoin on the balance sheet. They have a preferred instrument. There's a question around how much cash they have to service that preferred instrument. So definitely something that people in the industry are talking about is what will MicroStrategy do with their cash. You also have the quantum threat, and that's something that we should talk about. Elliptic curve cryptography in general. What is the upgrade roadmap for the Bitcoin project? Companies like Google and Cloudflare have come out with very concrete roadmaps to address the quantum issue, and we're not seeing that yet in the Bitcoin community. Hopefully we will. And then third, I think, is interest rates, is just what is the future path of rates? And I know Denise is going to have some thoughts on that. But I think these are the questions that are kind of looming over the Bitcoin market. It's interesting, though, because if you look at the blockchains themselves, as I said earlier, stablecoin adoption is just clearly the killer use case here. You know, we're seeing stablecoins settle on parity with the Visa network in terms of dollars settled per year.
Which is a ridiculous
number, right? 5 years ago, if we told you that was going to happen, I don't think anyone would have believed it.
So explain, if you could, just for a minute, that disconnect. Why aren't people feeling like the volume is that big and they're not maybe feeling like they're seeing it in their daily lives?
Well, I think you have this thing in the United States market, at least, where the payments technology is quite good, especially compared to the rest of the world. And in a lot of ways, stablecoins are competing to be an ACH replacement or a replacement for wires. Okay. People don't typically see those day to day, right? You're using Venmo or you're using Cash App. And so I think this technology, by and large, is underneath the hood outside of the Bitcoin use case.
Denise, I want to get you to a question that a viewer named Bobby sent in, and his question is, if the S&P 500 is hitting all-time highs day after day, why is Bitcoin struggling to reclaim 90,000? Now, I'll pause just because Bitcoin right now is churning in the low 60s, very low 60s. But when Bobby sent in this question barely a month or so ago, it was in the low 80s and 90 seemed achievable. So walk us through that disconnect.
Yeah, I think data point number one is just illustrating how volatile an asset crypto is, Bitcoin is. So the level of movement is, 3 to 10 times the level of the S&P 500 from a vol perspective. So it's interesting when you look at the data. I think one of the reasons why we have so many bullish investors is because they have been long-term oriented. And this is the interesting part about Bitcoin, is that you can have 75% drawdowns in a long-term uptrend. That kind of highlights the fact that it is a very volatile asset. But going back to sort of the correlations and the data, I've said before on this webcast that the closest correlation to Bitcoin specifically is the equity market.
Yeah.
So if you look at commodities, currencies, and equities, you'd say, it's got like a 0.6 to 0.8, depending on how you measure it, correlation to equities. Now, even that in and of itself doesn't mean it explains everything. In fact, it only explains 40 to 50% of the movement of Bitcoin. But there is another factor that is also positively correlated, which is bonds.
Oh.
And that's the interesting part. And that's actually a more monotonic correlation, which is kind of like statistical.
Meaning,
words.
you've lost me.
Stair-step pattern, very consistent over time, is that the higher rates have been, the lower the odds that Bitcoin is to go up, which is kind of that, negative correlation between stocks and bonds. But it's really interesting when you look through Bitcoin. So that is one of the reasons why I think that we've seen the sell-off in Bitcoin, at least when you look through history. That's a really, really tight correlation of an increase in rates and a drawdown in Bitcoin.
And I hear both of you kind of answering that third question we got about how and to what extent crypto, Bitcoin specifically, will fit into the larger ecosystem.
Mm-hmm.
Yeah, I've always thought about Bitcoin as a venture bet on the emergence of a non-sovereign digital gold-like instrument, a non-sovereign store of value. And I say venture bet because stores of value are worth a lot more than Bitcoin is today. Mm-hmm. And so we're really in the early innings if this thesis is going to continue to play out. And I'm in the venture business, and so these companies are very volatile in general. And if you had to mark them every day, it would be pretty nerve-wracking.
100%.
And so I think we're still in that early formation stage of this venture journey towards potentially a non-sovereign store of value.
So that's where we are right now in the moment. And if Denise and Matt said anything that got your attention, please pop a question in the live chat, upvote others, and we'll get to as many as we can. But now we're going to pivot a little bit to where we are right now, halfway through 2026. A couple more viewer questions that came in during registration. Is Bitcoin still highly and positively correlated with the NASDAQ? If not, why? That was from Jonathan. And Guillermo wants to know, is crypto's correlation to large cap tech declining? So Denise, I'm going to send these back to you. These feel like they are exactly in your wheelhouse. How would you respond?
So is it changing, right? So we've seen a real disconnect between what is Bitcoin specifically and technology stocks in the overall stock market. The question is, have we seen that before? And we have, actually, not all that often. But if we just back up and take crypto or Bitcoin specifically, have we seen these price declines before? Yes, they happen actually 10% of the time when you look at the data going back to 2013. If you say what happens after a decline like this and you're willing to look through the volatility, you usually, and these are historical averages, so they're not predictions, but you've seen historically Bitcoin double, right? 100% increase most of the time. In fact, like 100% of the time. That's the definition of a long-term uptrend. But to the question, is it changing now? Is this sending us some sort of signal? So we have a disconnect for the first time, 50% drawdown in Bitcoin, and technology is actually outperforming the S&P 500, which is up by about 10 percentage points. That's actually fairly rare. That disconnect has only happened about 4% of the time, but it's in 2018, 2019, 2022, 2023. Remember those times? It's when rates have been rising. So that is typically when you have seen the disconnect in the past. So I think that that's important to understand right now, is that we're not really seeing anything different than what we've seen historically. To me, the patterns remain the same, which is it's too early, I would say statistically, to say crypto winter is here.
Okay, excellent. Matt, anything you would add?
Yeah, it's a really interesting point. I mean, historically, there has been this correlation between the NASDAQ and Bitcoin. And I think it's just as simple as think about the types of early adopters that we saw in the Bitcoin space. These were the types of people that were generally into technology. They were probably more predisposed to owning high-growth tech stocks as well. It's been interesting to watch over the past 6 months, though, if you just look at the blockchain itself. And that's the beautiful thing about this industry, is you can just see the data every second. And so you're seeing these older addresses wake up. And my suspicion is that you have seen some asset rotation. You know, people that have held Bitcoin since it was $2 and decided to sell it at $100,000. Right? It's hard to hold something that long. And so you've seen the dispersion of ownership improve in the Bitcoin space. And perhaps there's some rotation there.
Yeah, I've often said if I was lucky enough to get in at $2, I would have definitely bounced at 10,000. I've lost my mind. There's no way I would have hung in this long.
Right, and you're seeing that in the data, right? So there's been news stories about OTC desks facilitating these big block trades for early Bitcoin addresses. And so that's normal, and I think would expect to continue to see that.
Denise, anything else? I just want to linger for a minute on Guillermo's question about the connection to traditional markets. I think that's almost the subtext of a lot of what people are asking now. What else could you say about that correlation or connection?
Yeah, I think one of the big misnomers as investors have is in terms of rates in the market is that people think, well, higher rates are going to be a consistent headwind to equity markets. And actually, that's not statistically true. If you look back to the 1950s and you said, I'm an equity market investor, let's say that Bitcoin is still related to that, right? I'm an equity market investor. What would I rather have, rates going up or rates going down? It's actually rates going up.
So counterintuitive.
Right. And the reason for that is because most of the time, not all of the time, but most of the time, higher rates are a reflection of growth, of underlying growth, not a deterrent to it. So I think that that's important to understand. I mean, yes, are there exceptions? 2022 was an exception. But I think that brings me to my next point, is that higher rates aren't usually, or I don't think that they will be in this case, enough of a headwind to create a problem for the equity market as long as there is growth, which we're certainly seeing in the economic data that there is growth right now. And the other thing is that inflation, which is another concern that would lead to higher rates, I think when you look at the data, given the fact that real incomes are now contracting for just the second time in history without people losing their jobs, that creates this, fortunate limit aspect to how far inflation can run. Because truly, at the end of the day, and you can see this in the statistics, inflation is too much money chasing too few goods. And if you don't have a meaningful more amount of money, then it's very different for inflation to be persistent in a runaway trajectory. And the sweet spot for the equity market that people might be interested in is between 3 and 4% inflation, meaning that you don't need to get back down to 2% what might be more, comfortable for the
yeah,
US consumer, but that's not been true for the stock market. So if you say that, you only have 15% odds when real income growth is negative of an inflation acceleration, and even that inflation acceleration is usually de minimis, then maybe inflation is not the headwind that you think, and maybe higher rates, as long as they're a reflection of growth, is not the headwind that you think, and equities are actually fine in still the stages of a secular bull market, and maybe nothing is really different this time in crypto or Bitcoin.
Wow. There's so much to unpack there. That's fascinating. Thank you for that. Matt, I want to hit you with a question that also came in during registration that's a little more technical about crypto, and specific Bitcoin. Stephen wants to know if Bitcoin will ever become a utility chain.
It's interesting. We've been talking about this for so many years in the Bitcoin space. I remember when I first started looking at Bitcoin, we were looking at it through the lens of a credit card disruptor.
Yeah.
And clearly that didn't play out. These days, I'd say most people see it as this venture bet on digital gold. And so I think my short answer would be I don't think it needs to do anything in order to satisfy the objective of being eventually a non-sovereign store of value. Now, we get pitched a ton of projects that are building that utility on top of Bitcoin. So I think it's very possible it might happen.
So people are thinking about it. You just don't feel it's super likely?
People are thinking about it. People are talking about bringing the Ethereum virtual machine, the kind of the programming layer of Ethereum, onto the Bitcoin network. People are talking about building layer 2 payments technology on top of Bitcoin. So it very well could happen. But I don't think it needs to happen in order for the Bitcoin investment thesis to ring true.
And do you feel like the ask is coming just because people are looking at other blockchains like ETH and saying, "Oh, I want to use my Bitcoin to buy coffee"?
I think that's spot on. So I think people are looking at this, especially on the founder side, and they're saying, "Look at all of the collateral. Look at all the people that just don't want to sell their Bitcoin, but they might want to use it in a lending protocol. They might want to do some of the things that you can do on Solana and Ethereum with their Bitcoin, and so that's driving it."
Over the past few months, I would say one of the most popular questions we've gotten is a version or a flavor of what's going on in crypto and how does it impact me as an investor? And so the question, I would say, a year ago was, oh goodness, Bitcoin's over 100,000, tickling $125,000. Is it too late? Today's question seems to be a version of this one that came in from Fung during registration. In today's market, is crypto investing for the long or short term? I feel like some of the subtext there is, oh goodness, now it's at 60,000. Like, how should I be wrapping my brain around what to do as an investor given where the price is?
Yeah, I think it's math. I think that the more volatile an asset class is, the longer your time horizon needs to be to see it through a long-term uptrend. I mean, if you think about like emerging technologies, and that's the way I think about Bitcoin specifically, like if you just look at correlations, it's not only like technology stocks, but it's specifically like software stocks. That's where sort of the correlation is closest. Those emerging technologies are the most volatile assets. To put a fine point on it, remember, like Amazon, which we now use all the time, was a new company in the dot-com era and had a 95% drawdown with, I think it was, 60 to 80% volatility that year and for the next decade. Now, Amazon's a mature business that has been a multi-bagger from an equity market perspective, but you had to have a long-term perspective to be able to make money in something that's that volatile.
I think we sometimes lose sight of just how young, I don't want to say immature, how young the asset class is.
Right.
Well, think about other asset classes. I mean, when credit default swaps came on the scene, it wasn't a retail phenomenon. It was largely institutions that were participating in this. And so I think we're very early, especially if you look at it through the lens of how many global custody banks even do this today. Right. Can you hold your Bitcoin with your global custody bank? The answer is no, because they were pushed out of this from a regulatory perspective for a number of years. And so that's changing. But I think we've just never seen an asset class that has been retail driven in the same way that Bitcoin is. So I think we're in the very early stages of this.
All right, you've walked us perfectly into the third part of our conversation, which is where we could be headed next. Where might crypto be moving for the rest of 26 and beyond? We have lots of questions like these two. One from Mitchell asking us where we see crypto by 2030, giving us a specific date. He threw in a second question there. Will stablecoins consolidate? And then another question from Kyle is how do we see upcoming global regulations affecting decentralization? So those are two biggies.
I think what we are seeing is a major overhaul, and I think a lot of it is regulatory driven. And so we are there are a lot of technologies right now that are pushing the financial system forward in a way that it just has not been pushed forward in 20 to 30 years. If you think about the legacy systems of a lot of these big financial firms, they're still on mainframes, they're still on COBOL. We're moving to frictionless capital markets of 24/7 trading, global access, the ability to hold your own funds, the ability to settle peer-to-peer. So I think it'll take a while, but it's clearly in motion.
Perfect. You started to answer some of Kyle's question there about regulations, but let's revisit that, sort of where we think it'll be in 2030, stablecoin consolidation, and in general regulations.
Stablecoin consolidation is such an interesting one because, for those who are not following this every day, a stablecoin is essentially, under the new Genius Act, it is a tokenized government money market fund, essentially. And so if you think about that, how many do we really need? You would think that this would consolidate.
Right.
But I think that the financial incentives of the issuers will lead us to have a lot of different attempts. And so I think it's quite possible over the next few years that we'll see this balkanized landscape and probably some interoperability companies emerging that facilitate the movement between different stablecoins. And eventually we'll see a consolidation. But I think it's a land grab right now. I think a lot of financial services firms would like to be the winner.
Right, and I think a lot of people are starting to hear about stablecoins and seeing big box stores potentially talking about offering their own, brands offering their own, and it's a little bit hard maybe to wrap your brain around how will I, as a retail consumer, interact with them through that framework.
Yeah, and if you're a big brand, if you run stores, for instance, why wouldn't you give it a shot? Why wouldn't you try to capture some of that net interest income from a stablecoin with the belief that maybe your customers would want to hold an account with you?
And Denise, back to you. I want to hit you with a sort of a twofer there. So you said niche. Why niche, given the recent momentum, and how does that impact your look at what crypto, the role it could play in 2030?
I think it's so long to be mature. I guess 20.
So even 4 more years, you feel like, okay.
Yeah, I think niche assets stay in niche mode for a very, very long time before maturity. So I guess it's more just like the use case. Not that there's not underlying growth in terms of use cases between now and 2030. I just think it'll still be considered a niche asset.
And if the question had been 2060, maybe you would have had a slightly different answer.
Yeah.
Okay. We've got a trio of questions now that, again, are headed right to you, Denise. What's the future of crypto in banking? How will it impact fiat? We get a lot of these questions. Caitlin's asking if we think cryptocurrency will become the world currency, rendering the dollar useless. That's bold, but interesting. And Anthony's going for a slightly softer tone. What do we think the future of crypto will look like? No crystal balls, no predictions.
Crystal bars.
And what do you think?
We can look at the data, and it hasn't been correlated to the dollar at all. Right, it's correlated to stocks and sometimes bonds, especially during large interest rates rise. But it's more of a high beta play on emerging technology than anything else. And I think when you look at the data, if you sort of examine the narrative of is there an underlying use case for Bitcoin that is opposite of the dollar, then you would theoretically see something like as use of Bitcoin goes up, you would see use of the dollar or desire for the dollar go down.
Right.
We have the tick data for that looks at foreign ownership of the dollar, of U.S. Treasury assets, and it's still higher. Despite the fact that we all want to think that it might be different this time, so far there's no evidence of that in the actual data. And even despite the fact that central banks are buying gold, more gold than dollars, even if you net out central banks and look at all retail investors and look at all countries and add it all together, there's still more treasury buyers than sellers. So I think at the end of the day, the concept of having to have it be opposite of any fiat currency might not be the accurate way to think about the roadmap. I think it might be more related to the dollar than anything else, meaning that it's the financial underpinning of what is fiat currency. So they don't necessarily have to be opposed to each other.
Not the zero sum that a lot of people.
Correct.
The questions tend to get framed that way.
Correct. And so far, you're not seeing any of the zero sum in the correlations either.
Matt, what do you think?
I see Bitcoin more in competition eventually with gold, with other stores of value like fine art, perhaps real estate. I don't see Bitcoin overtaking fiat currencies in terms of a transactional mechanism. In fact, I see this technology perhaps advancing the dollar as the apex predator of global currencies and pushing the dollar further into other countries. I think that's what you actually see in the data in the stablecoin market, where if you took all of the stablecoin issuers as a cohort and you just added up the number of government bonds that they hold, it would be the 14th largest country in the world right now as a stablecoin issuer.
Yeah.
And so I think we'll probably end up seeing this spontaneous dollarization happen in countries outside the U.S. And so in a lot of ways, the story that early Bitcoiners were telling themselves about Bitcoin displacing fiat currencies, it will be the dollar via blockchain rails that displace those other currencies.
So is it the opposite of zero sum, bullish on both the dollar and bullish on Bitcoin?
I think those are not incompatible views whatsoever. I think and that's a big reason I think why this stablecoin bill was so bipartisan. Is from the U.S. perspective, this is a great technology. This allows us to proliferate the dollar at mass scale, 24/7. Anyone in the world with a smartphone can now hold a dollar.
Super hard, as always, to say exactly what's coming next, but really, really great to have that historical perspective. And again, referencing the data to help prove your points. Again, if you're watching right now, just remember of course, there's no way to predict what's next. So before investing, we always suggest you do as much research as you possibly can. Continue to stay informed. As we've suggested today, things move fast in the crypto space, so you're never exactly done learning. And to help you continue that learning, we've got a fantastic library of many great resources. Again, fidelity.com/crypto is a good URL to bookmark. You'll find that crypto glossary, more timely market insights, on-demand versions of the live stream, and a lot of other great assets as well that you can link to continue your educational journey.